Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro. Thank you very much for listening to this video today. And as usual, if you haven't done so already and you've been living under a rock, then please this video and subscribe to my channel and you'll get the latest updates from my portfolio and some other bits and pieces. So in today's presentation, I'm going to be going over what happened in stock markets and the crypto markets last week and doing a thorough review. I'm going to be talking a little bit about my performance as well as talking about other areas of the strategy, where we are in the markets, and also really recapping our overall performance for February, which has just passed as well. So just to get things started, I will move on. So last week, our portfolio did extremely well and we were up about 7.51%. That is a very large gain for our portfolio. And I'll explain a little bit about why we performed so well last week. So last week, the S&P 500, the Nasdaq, and all the European indices did have a small rise. It was nothing spectacular, but the markets did rise last week. And we did see a Nasdaq all-time high. China's stocks didn't perform as well. It wasn't really awful, but China has been a bit of a lagging index so far this year in 2024. I still think that the markets are severely undervalued, but what's happening is that in China, because of the political risks that are occurring and also a slowdown in the growth, this has really had an effect on Chinese stocks. But I do expect there to be some recovery sometime in 2024. Bitcoin did extremely well last week. It was up about 23.7% for the week. And we now see Bitcoin reaching very close to 65,000. It's now just about 5.5% below the all-time highs which we set in 2021. So it's a very exciting period. I'll go over that in a little bit more of a detail later. And altcoins rallied as well, especially as we've had much more kind of risk on market at the moment than we had previously. So it's been very good for our portfolio. If we can compare our performance to the other indexes, the Nasdaq was up about 1.7% overall for the week, and the S&P 500 was up about 0.9%. So we did really overperform the indexes, and I think a lot of that was to do with the crypto rally that we had last week. If we look at a 2024 year-to-date against benchmarks, our portfolio again is doing extremely well, and that is on the back of what was a really good performance as well last year in our portfolio overall. So our portfolio is up about 13.25% for the year, which is very good. If we compare that to the Nasdaq, which has been up about 8.4% 2024 year to date, and the S&P 500, which is up about 7.7%, you can see a clear outperformance. Bitcoin's up about 51.82% in our portfolio. So it's not hugely surprising. Our portfolio is doing really well this year. And if we look at February, which I just wanted to summarize what happened in February, our portfolio was up 14% in February. So this is one of the best results, monthly results that we've had in quite a long while. And we are now not that far off the all-time highs that were set in our portfolio in 2021. What I do want to say now on that specific subject is that our portfolio did hit a high in around November 2021, but it was a very short period of time, and it was a very large gap up. And I think what happened is a lot of people copied the portfolio during that time when our results were extremely high. And what that led to was a disproportionate amount of copiers in that specific kind of 2 weeks to a month period. So I think if a lot of you did average down during the bear markets, like I suggested, then you will find your portfolio and your copy being significantly up. If it's not already because you did copy during that period, thank you very much for your patience. And I think within the next in 2024, we should be able to make some really good gains in our portfolio and start to repay some of that patience that you showed. So I'm very excited. And so also welcome to all the new copiers that may have copied me more recently. So if we look at the main news last week, the Nasdaq last week did hit its all-time highs, and that's for the first time in 2 years. Previously, the S&P 500 had also hit its all-time highs, but Nasdaq is really showing considerable signs of growth. Again, a lot of that is to do with the Magnificent Seven that have performed again very well at the start of this year. So the markets are looking pretty strong at the moment, and it seem to be leaning more towards now a risk-on type of environment, especially as the interest rates are expected to be decreased sometime over the next couple of months, and we start to see some interest rate cuts. If we look at some of the data that was received last week, the personal consumption expenditures, which is also known as the PCE index, that rose 2.8% for the 12 months ended in January. And that was mostly in line with expectations, so that didn't take the market by any particular shock. We also saw data from the US, which is the ISM Gauge of Manufacturing Activity. So this is basically a manufacturing activity progress type of metric. And what we've seen is starting to fall from an 18-month high of 49.1 in January back to 47.8 in February. So a slight reduction in that. We've also seen upside surprise come in February in terms of personal incomes. We've seen personal incomes jump about 1% in February, which shows quite a strong, buoyant overall economy in the US. If we look at both headline and core inflation, that slowed less than expected in February. We've seen the annual consumer price growth in the Eurozone has slowed marginally to 2.6%, and core inflation has decelerated to 3.1%, which was above the consensus estimates of 2.9. So basically, it's showing that there's been quite a good progress made in terms of reducing inflation in the Eurozone. In Germany, we've also seen the annual consumer price growth has continued to decelerate in February, and that's slowing down to about 2.7%. The core inflation and prices of services, however, did rise. We've also, if we take a look at the UK, we've seen the house price index in the UK has risen to 0.7% in February, and that's about 1.2% year over year. And that's the first annualized increase since January 2023. So what we are seeing is some steady rises in house prices again in the UK. And the Bank of England has said that mortgage approvals have risen to over 55,227. And that is the highest level since October 2022. So what we did see is we did see quite a slow housing market. However, it's still very slow, but it's starting to pick back up in the UK. The official manufacturing purchasing managers index has fallen to 49.1 in February, and that is down from 49.2 in January. And that shows the official manufacturing purchases managers index in China. The value of new home sales in China of the top 100 developers in China has slumped 60% in February, and that is from the prior year period, accelerating from January's 34.2%. 2%. So what you can clearly see here is that in China, the housing market is still pretty severely affected. And what we are seeing is it's because of the amount of inventory of properties in China. Many of them were unoccupied and were bought for investment purposes only. The housing market is still struggling pretty severely in China. So as we move on to the top 3 performing stocks for last week, the top performing stock in our portfolio last week was Magnite, which is a sell-side advertising company, and that was up about 33.84%. So that has done extremely well so far this year. And the second best performing stock in our portfolio last week actually was Coinbase, and that was up about 15.54%. And then third best performing stock last week was Medical Properties, which is a REIT company which basically looks after the management of properties which are used for hospitals and other areas. So that was up pretty significantly last week. I usually just go over the top performing stocks, and I usually don't touch upon crypto here because it has a world of its own. But I just did want to give an honorable mention for our portfolio last week of Theta coin, which was up 64.17%. So that was a very good performing crypto in our portfolio last week. And after quite a slow start to this bull run for Theta, it is starting to perform much better. So as we move on to our Death by Charts edition, I just wanted to go over a couple of different charts. So the chart to the left, what you can see is the performance of the Magnificent Seven, and that is from 2022 to 2024. For some of you that aren't familiar with the markets, this contains the major companies in the US, the major tech companies. So you have the Googles, you have the Microsofts, you have the Nvidias, you have the Meta, etc., etc. And that they have been performing extremely well, especially last year in 2023, and this year further accelerated in 2024. And since the start of 2022, Nvidia has gained 168%, and that has outpaced the S&P 500 by over 10%, and many other members of the Magnificent Seven. Chart to the right that I wanted to show you was the S&P 500. And what you can see is that the S&P 500 ended the week at another all-time high, and it's the 13th so far all-time high of the year. If we bear in mind that in 2023, there were no all-time highs, we've already seen 13 breaks, and we are only in the beginning of the third month of the year. So quite astounding growth from many stocks so far this year. I'm not going to go into the third chart in a lot of detail, but what I did want to show you, because it's quite a large length of time, is that the Nikkei 225 index, which is basically the Japanese stock market index, actually for the first time in 34 years, yes, you got that right, 34 years is a long time, the Nikkei 225 index is finally back at its all-time high, and it surpassed the prior high from December 1989. So really good growth and things starting to pick up in Japan. The fourth chart that I wanted to show you was to really show you some of the disparity in terms of spending. Even during the kind of slump period of 2022 and some parts of 2023, what we saw diners continue to spend their disposable income on food, dining out, groceries, and we saw the price of groceries spike, and we saw a lot of inflation in terms of the food. And really what we've seen is that appetite of people continue to dining out, and actually we've come to those kind of all-time highs in the amount of spend that people are actually spending dining out. And what you can see is the US consumers have spent 11.2% of their disposable income on food in 2022. So that's the highest share since 1991. So a lot of appetite, excuse my pun, for people to spend money on food. So as I move on now to the crypto news and views, I just wanted to really, first of all, just explain overall what's happening in the crypto market. So it has been a absolutely spectacular rise in 2023 and the beginning of 2024. The beginning of 2024 alone, we've seen rises of over 55% in Bitcoin. And you may ask yourself why, if you're not really that in tune with what's going on in the crypto market. And again, the main reason is to do with the Bitcoin spot ETFs. So we have seen historic amounts of inflows into the new Bitcoin spot ETFs. And what we've also seen is a slowdown in the Grayscale Bitcoin Trust outflows that we had at the beginning of the year. So what this is leading to is massive shortages of Bitcoin. So a lot of ways that the Bitcoin spot ETFs are able to buy their Bitcoin is through over-the-counter services. They have run into a massive shortage of being able to get Bitcoin. And what that does is that forces them to buy on the open market on exchanges, which obviously there's a lot of buying pressure, and that really increases the price. What we've also seen is 80% of Bitcoin hasn't moved in the last 12 months. So that has a further pressure on the overall supply. And as the demand increases, this is really driving the price up, and we're hitting price discovery. And it's quite unbelievable, really, the amount of buying pressure at the moment that's going on with these Bitcoin spot ETF providers. And it has to be known that they're not even really actively soliciting and selling these products yet. The advisors for all these big money managers haven't even gone out to the market and really started selling these to their customers. There's a lot of approval processes as well for some of the major brokers who haven't even started to list these Bitcoin spot ETFs on the platform. So really what I can see is over the next couple of months, as those approvals come in and as the salespeople start selling those Bitcoin ETF to their customers, then I think we're going to see increased volume continue, and this is going to lead to more and more demand. You also must know that in just about a month's time or a month and a half's time, we are going to have the Bitcoin halving, which is going to halve the amount of rewards that miners get for mining Bitcoin. Usually there's some selling pressure of the miners covering their capex by selling their Bitcoin. However, because the rewards are halving, then it also means that there's going to be a lot less selling pressure on the markets. What we are really seeing, to cut a very long story short, is we are seeing a massive supply-demand imbalance, and that is putting upward pressure on the price. So I am expecting us to hit our all-time highs. I did say in 2024, but it's going to be a lot earlier than I expected. I didn't expect, to be very honest with you, last year and at the beginning of this year for us to hit our all-time highs before the halving period. But I think just truly because of the demand that's coming from these Bitcoin ETFs, I think it's going to happen. And we could see a front-loaded cycle, a left-leaning cycle where a lot of the gains become at the beginning of the bull market. Because the price is going up, we're also starting to see a little bit of frothiness in the market. And how do we know that? Is because we know that because a lot of the meme coins are starting to pump. This is usually a sign that we are going towards a risk-on market. We've seen huge pumps from Doge, Pay, Bonk, Shiba, you name your meme coin. I'm still not really into these meme coins, although I do see that there probably is some upside ahead. This is usually a sign to me that things are getting a little bit frothy in the market, or that we're going into a full-on toe cycle. Third thing that I just wanted to share with you is what we did see is that we have seen some major figures, from celebrities to politicians to massive investment managers, who have all started to change their tune on Bitcoin and have started to become supporters and proponents. So the very recent one last week was Trevor Noah. He is a comedian, South African comedian, who actually lives in the US. And he said one of his biggest mistakes was not buying Bitcoin early when he first heard about it. And I think that this is the sentiment from many people who don't understand Bitcoin at first. They see that the prices goes up pretty wildly, and they're not sure really why it goes up wildly. And then they automatically translate, because of the high price gains, that it has to be either some type of scam, or that these gains aren't sustainable. But when you look at the kind of supply demand dynamics of it, and the fact that it is a finite supply of only 21 million, and things do go in cycles, you do see that obviously the network effects do start to drive up the price. So in terms of crypto, what I'm expecting us to do now is, as the Bitcoin price starts to go up, I think we're going to have quite a big rally in altcoins. We've already seen Ethereum has started to do pretty well again over the last couple of weeks after lagging Bitcoin. And I think that's going to work its way now into the other layer ones, the layer twos, the GameFi, the Deepin, all the other different projects and narratives. And I think we're going to have some really good gains over the next couple of months. What I do want to say, I have been giving a very positive message about crypto recently, and I'm still extremely bullish. I think that we are really only just getting started. But what I do want to say is that you need to be patient with the markets, because when things rise this fast and when things rise this steeply, you can get some pullbacks. So just for many people that are new to the markets, 2020, 2021 were massive bull markets, and we saw huge gains. But we also did see 6 to 7, 20% or more drawdowns during that period. So you can get pretty heavy drawdowns as well along the way. So it's important that you have a long-term view and you don't get too sidetracked by the short-term moves, because that can really affect your long-term positions. Lastly, I just wanted to go over the good old big rainbow chart and really just show you that, again, we are still pretty early on in this bull market. And really, we're still just in that early stage of kind of accumulate to still cheap to hodl. We're in that area. We're not in overbought territory like we were in 2021, for example. So I still think we're pretty early, but what we may get is those pullbacks along the way. It's very difficult to know when those are. All you can do is really be patient. So I'm going to leave it there today, guys, so I can keep this digestible to a short period of time. If you haven't joined my Discord group already, make sure you check the link below and join that. You can really talk to a really wide group of people that are in the same position of you. They're all copiers of me, but they also talk regularly about what's happening in the markets. And on there, you can ask me any questions at any time. So thank you very much. I really appreciate you all being a copier of me. I do appreciate all the money that's invested in my portfolio. And I am confident, humbly confident, that we can perform pretty well for the rest of 2024. Very happy with the February results. And I think as the months progress, I think we will start to see the rewards of some of that patience that you have shown in the portfolio. So thank you very much and have a good week ahead.